Cody King, I want you to come up here, please, sir. Cody is a longtime friend of mine. Cody and I met each other 30-some-odd years ago. It's been, Cody, hard to believe it's been that long. But Cody works with our title sponsor, Capital Farm Credit. And the folks at Capital Farm Credit do an amazing job. I have the opportunity to know quite a few of those folks that do an amazing job of helping provide capital, provide financial backing to allow us to do some of the things as ranchers that most of us wouldn't be able to do without you. And we appreciate that. And they do it with honesty, and they do it with integrity. They do it with payback dividends, which I really like. And so that's not the right word, but you'll get there. You'll tell them what it is. It's cash back, and I like that. He is going to introduce our next speaker, and he's going to tell you a little bit about Capital Farm Credit. And I want you to be sure you've walked by their booth, but I'm going to ask you to go by there and visit with these good folks, because not only do they provide that capital, but they provide that service similar to what Justin talked about this morning, and with Justin Benavides, to help us make the smart decisions that are going to be smart, because they want to loan money that they know you can pay back. They want to help you make wise decisions. If y'all will, please help me introduce Cody King, Capital Farm Credit.
Thank you, Donald. And thanks, Andy, for giving us the opportunity to be the title sponsor this year. Just a little bit about Capital Farm Credit. We're a cooperative, and as a cooperative, we're owned by our borrowers. A lot of them are sitting in this crowd today, and I want to thank y'all very much. You buy stock in the company. As a result of that stock in the company and your ownership position, we share our profits with you, which is really unique. And back in the day, I remember my dad ran a co-op in gin, and they gave back almost 100% of their profits. And very, very few today do that. So I think that's what makes us somewhat unique. I have not ran across any co-op, especially a lending co-op, that gives back almost 100% of their net profits. And as a result, because of our size and scale, our profitability, and because we give back almost 100%, our patronage program that we give back to our borrowers is much more lucrative. That's what makes us very competitive from a rate or expense standpoint. If you compare us to some of the other ones, they're normally somewhere around 40, maybe 50% of their net profits, and they're smaller, and they're not as profitable, so it's kind of compounding. So that's kind of where our value lays. To give you a little bit of an idea of our patronage, there's a couple of ways to look at this. Number one, from a rate standpoint, so if you started a 6% rate, and this is based on our historical average here over the last 10 years, conservatively, we're going to give back about 20% of the interest you pay us, you get back in our spring patronage, which is starting year one every year while you've got that note, okay? So that 20%, say you start at 6%, you take 20% of that you get back starting year one every year, that's about 1% off your rate. So you start at 6, then you're at 5, right? Okay, but we don't quit there. We have what we call an allocated equities program. So in the fall, our fall patronage, as we call it, is an allocated equities, and that's actually a little bit larger. It's about 25% conservatively. That 25% accounts for about 1.5% reduction in your interest rate. Okay, so we went from 6 to 5. Now we're going to take it down from 5 to 3.5% effectively by the time you get all your money. Okay, the kicker is, now that fall patronage, we do have to hang on to that money, so you need to know that. For that, in this schedule we're on now, we're going to hang on to it for 6 years, and then you're going to start getting it year 7. So you're going to start year 1 on that spring patronage. Year 7, you're going to start getting 2 checks a year. The cool thing is, when you pay off that note, you're going to continue to get the checks in the fall for 6 years because you didn't get it your first 6. So you end up getting all your money, but we got to retain that for capital, operating capital, those kind of things, because we do give back almost 100%. So putting some numbers to that, another way to look at it, on a $250,000 note over 5 years, our patronage accounts for more than $20,000 if we do what we have been doing. $500,000 note over 10 years accounts for about $80,000, okay? And $1 million, so you want to go buy $1 million farm, ranch, over 20 years, that's over $300,000 that you're getting back from us. If you had the same rate at a commercial bank or someone that pays less patronage, think about that, because that's a big number, big value, okay? That's all that's the only spiel I've got. I'm going to introduce Pat Shields. We came and talked to Andy about having a speaker from us. It really was a kind of a tough decision. We've got a lot of good people. We could have had our CEO, we could have had our chief credit officer come, somebody with a big title, but I chose Pat Shields because Pat is a local boy. He's from Spearman, number one. Number two, he's one of us. He owns cows. He ran an auction barn. He knows cattle. He knows the cattle business. And so that's why I chose Pat. And he's an Aggie. That's not why I chose him, but he is an Aggie. And anyway, he's been with us about 10 years. He's a senior, heavy on the senior, relationship manager. And without further ado, I'll turn it over to Pat Shields here.
Get him turned on. All right.
Thank you, Cody. Appreciate it. Good to be back in the Texas Panhandle after living down there in some of y'all call East Texas or South Texas. We just like to call it the Brazos Valley. It's good to see some people that I worked for back in the day when I was growing up here. And find this clicker. All right. And we're just going to talk a little bit today about the history of the cattle business, lending, and what you can do to have the best chance of getting a loan when you go to your financial institution, whether it's one of these 50 banks out here or the farm credits back there, they'll all do you a good job. So here we go. We're going to talk a little bit about what the industry looked like. You know, years ago, we had really long days, lots of physical labor. We had the guys up there working around the chuck wagon and doing cattle drives through this part of the country. Now we've got people with technology, improved facilities, and animal health enhancements, genetics. If you thought about what this convention would look like 150 years ago, there'd be one breed association. The people over there doing the cattle handling would have a rope and a whip and a stick, and it wouldn't be very good beef, would it, Andy? But we've come a long ways. But yet, you know, we look up here, in the old days, we see those guys before technology. What are they doing up there? What are they saying? They're saying, let's go Brandon. So now we get down here and we get all of these technologies down here, and those guys are all tweeting, let's go Brandon. So I didn't realize there was that many spring workings everywhere across the country. So some things don't change. But, you know, we kind of back up there, we see those guys, and we think about the Cowboys and John Wayne, and I hate Bruce Dern to this day. Or we have Lonesome Dove, you know, with Gus and Lori. But now we got Yellowstone with Rip and Beth. So, you know, not all change is good. So we're kind of moving along. You know, last you was talking about Generation Z. I'm an X with a lot of baby boomer tendencies. As you look along here, there's a lot of baby boomers in the room. And, you know, the baby boomers, they're tech-friendly, practical, realistic, and duty-driven. And we move down here to these millennials, and this is when they show up. You know, they're tech critics, they're creative, they're optimistic, and they're motivated and easily demotivated. So that's something that we have to remember every day as we're going along with our lives. So we see an aging rural population. We see a decline in the numbers. People have moved to town and commute to the ranch, where back when I was a kid, everybody lived out on a ranch and a farm and came to town for school or church or grocery shopping. We're getting to be several generations removed from production agriculture. Just in my family, I'm agricultural services, and I don't know that my children will be in an ag field at all, but that's what it takes sometimes to make a living. All right, as we get to talking about what all is going to be needed, financial services that are going to be needed for a ranching operation. It all boils down to that. You got to have cattle, a place for them to live, something for them to eat, and something to deliver it when they just can't graze. Cow-calf expenses. How many of y'all do a budget every year and kind of figure out what your cow outlays will be for the year? Good. Will Jarvis does. Glad to see that, Will. You know, we're going to have lease payments or land payments a lot of times. Fertilizer and weed spray. We see the Bayer guys, you know, they're making it all cheaper to do and more effective. You know, you're going to have feed, cake, hay. I really like saying cake because when I go down to where I come from, they have no idea why a cow would be eating a cake. But you guys get that and understand that. So when I do the presentation at A&M, I'm going to have to change it to say cubes. You know, you're going to have bulls, semen, some way to breed your cows, you know, some replacement females, equipment, facilities, and fencing. You know, fencing been replaced around here, you know, from bad things lately, and that's something that's just got to be figured out. You know, interest payments, land payments, insurance, those things that, you know, we all have to pay. And then risk management. That's something that we always, and that's a key when you're making a budget. If you're going to hedge some cattle, you know, leave some room in there for margin calls. If you're going to hedge some feed, leave some room in there for margin calls. You know, whether you use futures options, some LRP, or the RFP. Where does cash come from? You know, sometimes people have it in the bank, and they cook in their own grease, as we like to say. You can get it from USDA, borrow from the bank, capital. This one works really well. I never could get them to tell me the coefficient of oil wells to mama cows to operating efficiency on a ranch when I was in school. But I think it helps. And then once or twice a year, you got the cattle at the sale or at Superior, however you market your cattle, and that's where cash comes from. So sometimes you need to get some. What kind of loans are really out there for you as producers? We've got operating loans. The one we use primarily in the cow-calf sector, we call it a master note in farm credit. A lot of times the banks would call it a draw note. It's a set amount of commitment that you're borrowing. It's based on your annual operating plan. And a good way to kind of figure it is the number of cows you have times what you figure your cost to carry them for a year is, and then other expenses you may need. Some people put their living expenses in their operating note because they could have sell cattle one time a year. Most of these operating lines are a year term, annual note. Sometimes we'll go up to 3 years with proven history. So the next kind of operating thing is a revolving line of credit. It's like a credit card. You borrow money, you pay it back, we reinstate the commitment. It's there to use again once you've paid it back. Typically, we use these on stocker operators and feed yards. There's some more sophisticated ins and outs with it and reporting issues that kind of sometimes discourage a rancher from using that. And the master note works really well for them. You know, we'll see someone like Vaca Corrales or Canadian Feeders or Perryton Equity. You know, they buy lots of grain, sell grain, buy cattle, sell cattle. They have a lot of deposits and a lot of draws. That's where a line of credit works really well for them. Term loans. That's just something 3, 5, 7 years, maybe 30 if it's real estate. You're going to need to put breeding cattle on there. We wouldn't put stockers on a term loan because their lifespan within your operation would be less than a year. They would work on the operating line. Equipment, capital investments, cake bins. I like to say cake every chance I get. Facilities, fencing, something that's going to take more than a year to pay off. And a lot of the times it's a good thing to borrow money for some of these, and it frees up your liquidity. And I've got liquidity bolded up there. It's pretty important. If you pay off all your loans and you don't have any cash and you get an emergency, you're going to have to go borrow some money. Or the neighbor offers you a lease or to buy his place or buy his cows, you'll have a down payment. So it's always good to have some liquidity as much as you can without strapping yourself. Because we've seen a lot of people hurry up and pay off their ranch. Then they don't have any cash. Then they have a fire or a drought. Or something comes up and a tractor burns up. Well, they don't have a down payment. So we don't want anybody to get in a bind. So remember liquidity, having some cash on hand, if possible. What do you look for in a lender? In our business, it's really good to find one that knows agriculture, knows the area, knows what environmental and economic things you may face, knows everybody in the community, and really knows those that you should stay away from. You know, everybody knows the good people, but it's better to know the bad people. What kind of things, qualities would you look for in a banker or should look for? We mentioned being knowledgeable already, professional, have a background, education, growing up in ag. I've always told people, you've never really been a cattleman until the best cattle you ever sold lost $300 a head. That's a lesson you learn, and that's where a good ag background helps in the lender. You want to have someone with a personality you can stand, because you're going to have a lot of conversations, so you might as well like the person. So that's a big key to me, is finding a fit within an office. In our office that I work in, we have 4 or 5 different loan officers or relationship managers, and we try to pair them up. If someone's really detail-oriented as a borrower with their detail-oriented loan officer, if some people that just want the money and, sit down and talk, they usually come see me. Because this deal is a long-term relationship, and you're going to be in it for the long haul. This brings us to the 5 C's of credit. We're going to talk a little bit about some things here, what we look for, how we evaluate a borrower, and the things we find very important wherever it is you go to seek financing. The first one's character. The borrower's reputation and standing in the local community. When we're lending on cattle, and cattle is our collateral, which will be another C here in a minute. Can cattle vanish? Can they run off? Can they run through a sale barn in Oklahoma City and I don't know, nobody knows where they went? That's very important in cattle production lending. I think it's the most important C, is knowing the character of who's sitting across the desk from you. The second C is capital. That's the borrower's personal investment in the ag operation. Like we were talking about earlier, having a down payment or having equity in the land or equity in the cow herd. Something like that you can margin the loan that we would make you. Capacity. That's your cash flow. That's one thing that all the farm credits are really high on, is a cash flow analysis. We want to look at your plan, discuss with you what you think you're going to do for the year, and are you going to be able to pay us back and everybody else back that you have to make a payment to this year. Collateral, those are assets used to secure the loan. Pretty much on a ranch and loan, the cattle is a collateral. Sometimes you pledge land, pledge equipment, whatever we need to do to get our equity position right. But that's the things that are out there to secure the loan. The conditions are what we do and what we agree upon, such as the interest rate, purpose of the loan, term of the loan, and repayment, when the payments are going to be. Anybody have any questions so far? Good. Lending philosophy. There's really 3 types of risk. There's operational risk, character risk, and collateral risk. Our operational risk is your operation going to make enough money to pay us back? Can you pay us back? That's the operational risk. The character risk is, will you pay us back? If you can. If some people choose not to, that's not fun. But that's a character risk. And then our collateral risk is, if something goes really bad or the character risk kicks in and you decide not to pay us back, do we have the collateral back there? Is there something we can do that'll pay us as a lending institution back and make us whole? We don't like to get there, but we have to consider that when we get into a relationship. Something that's very important, and we're going to kick off this part of the deal about preparing to meet with the lender. What information is any one of these banks, any one of these farm credits, USDA, FSA office going to ask for? We're going to want a written plan. If it's not written down, it's just an idea, right? I mean, we all have a lot of ideas, but when we get a pencil and paper or a computer and a keyboard down there, it really becomes a plan when we can share it with somebody. Have some tax returns. If it's your first time meeting with this institution, 2 to 3 years tax returns. If you're renewing a note and you have a relationship with that lender, just the current tax return's good. Have a profit and loss statement, if you have one so far for the year. Some people call that an income statement. We have some different terminologies. So if you can come up with something like that, that would be really good. Have your current financial statement. We call it a balance sheet in our shop. Balance sheet, financial statement, same thing, just different terms. Have it up to date. We're going to go over one in an example here in a minute. If you're operating as an LLC, an LLP, or you're incorporated, general partnership, if you have any sort of entity documents, bring those along. Bring the operating agreement, articles of incorporation, the operating agreement, so that we can know who the security would belong to. Be honest and open. So many times we just have to pry things out, find things, and it's so much easier if you just tell, I owe everybody this, I owe that, I have this partnership, and a lot of times people think that, okay, I've showed you plenty of collateral, I've shown you plenty of capacity to pay you back. That's all I think you need to know. But we need to make a global picture so that we can put everything together. Our underwriters will keep telling us, and then we'll keep calling you. So if you got everything you know, let us know everything you know, and it makes it so much easier for all of us. Kind of going to go over a balance sheet or a financial statement. It's real simple. Everything over here is what you have. Everything over here is what you owe. And a balance sheet, we've had a lot of right-wing people here yesterday. They lean really right. But we want a balance sheet to lean really left because we want way more assets than we do liabilities. So we want a Fox News balance sheet, not a MSNBC one. So basically the assets, we have we have current assets. That's everything, cash, liquidity, securities you can get your hands on, calves you're going to sell this year, anything that money's going to come in within the calendar year. Accounts receivables, such as that. Some people have midterm, or we just go with long-term assets. Anything after that is anything that won't be converted to cash in 1 year. Tractors, mama cows, land, facilities. So all boils down to net worth. Total assets minus total liabilities be your net worth. Current assets, like we said, cash, securities, prepaid expense. Sometimes for tax reasons, you prepay leases, prepay some feed, buy some fertilizer before it triples in price. All your accounts receivable in your inventory your calves, your cull cows, the bulls you're going to ship this year. Current liabilities, it's all your short-term debts, be your annual payments on your long-term debt, be your operating line, accounts payable, taxes owed. Current portion of long-term debt, like we talked earlier, is this year's payments, and credit cards. And credit cards, a lot of times, we discover those when we run a credit report. Sometimes people forget that they have a Best Buy card, a Victoria's Secret card, and sometimes one of the two borrowers didn't know that there was a Victoria's Secret card. So that's being open and honest, and we find a whole lot of that out on a credit bureau. It's not a big deal if you've forgotten, but try to remember all of that when you come into the bank, and it'll make some odd conversations a whole lot easier. Long-term assets. A lot of times they're called fixed assets or capital assets. Those are things a business or a ranching operation expect to use, replace, or convert to cash beyond the one-year term. Typical examples: land, your breeding herd, all your equipment, your improvements, corrals, bins, barns, home, cars, cake, trip hopper. What are long-term liabilities? They're going to be the payments associated with the long-term assets, correct? Be your mortgage on your home, your land loan, your equipment loan, car loan, student loans. Those things are really real today. If you look in your notes when you get home, if you want to, or maybe I'll teach you well enough here that you won't have to, but I doubt that. Here's an example of a balance sheet. Up in our current assets, we got our checking accounts, our cash, our hedge accounts, the investment we have, and we're going to sell 500 calves this fall. Over here on the right-hand side of those current assets is the current liabilities. We got some income tax quarterlies we got to pay, lease on the Jones place, and then our operating line up there. That's what we have against that. It works really well to line them up on the same line. It'll remind you here on these 550 cows here in our long-term assets, their value, and then what we owe at the bank. It reminds us we're getting close. It reminds us what's up there, and it's easier for our credit analysts to read and ferret out as well. So our long-term's 20 bulls. We've got some equipment up there valued at $1.3 million that's paid off. See, there's no debt against it. That works really well if you have a lot of equipment, a lot of things like that that you want to just put on a schedule and put that number up there. That works better. Your accountant probably has it in the back of your tax return anyway. We have a ranch truck, financed with Ford Motor Credit. We have Mama's Cadillac, financed with GMAC because they had, 0.9% financing. It was a really good deal. We made money one year, so we bought a Cadillac. Got a John Deere tractor over here, and what we got left on it. We own the Lang place, the Tatum place. Lang place is paid off. The Tatum place, we have a note, and the home place is free and clear. It's easy to see what we have, what we owe, and then our net worth. Any questions? All right. Now we're going to kind of go into what do I need to do to start out. I've seen the TCU Ranch Management booth. I've seen WT and Clarendon folks here today. This is something that, and this guy's lucky. He's not even going to lead. He's going to win enough money by the time he gets out of school to start ranching. So people like that. What is a written plan? It's a decision-making tool that you state your reasonable business goals. You kind of need to do a little research. Because we can all draw something up on paper that makes money today, tomorrow, and every year, but is that reasonable? It needs to illustrate if you can succeed over time. Plan for profit, including cost and an income analysis, because that's the main thing. What's it going to cost me to produce? What am I going to sell it for? Am I selling it for more than it cost me? Pretty simple. But it doesn't work that way every year in agriculture, does it? We have make it a 5-year plan. We know the cycles. Commodity prices go up, commodity prices go down, cattle are up and down. Can we make this thing sustainable? And that's another good word. Usually if you say sustainable, you've got to have given a good speech. So be sustainable. You know, and weather conditions always play into that, and we don't ever know what it's going to be like. You know, I grew up in this part of the world where 17 inches of rain a year, and usually remember the 2 days of the year that we get it. So that's something else you got to do. As you're beginning, find you a mentor. What is a mentor? What does the mentor do for you? He's a trusted advisor, someone that's been there. Find a successful cattleman or businessman and to help you. Look over your plans, give you ideas. Don't get an idiot. I mean, you know, find that guy that doesn't talk all the time but looks like he has something. The idiots, they'll tell you all the time. They'll give you free advice. But find you someone that'll give you good advice that you can cash in one day. You know, someone that offers you honest feedback. Says, that's not going to work. It's, you know, I've seen it so many times through my life. That's just a bad plan. Let's retool that. But you also have someone that has to encourage healthy, positive feedback, understanding technological advances. I mean, we can't just ranch like we always did. We have to use better genetics, better marketing, better health care. You know, if y'all have all seen Ron Gill, you know, handling techniques, all those sort of things that we do now that we didn't used to. So you need to advance in that. And having a mentor brings comfort to your lender as well. The number one best thing that I can recommend is if you're getting started ranching, have another job. Work for another rancher. You learn things on somebody else's dime. You get paid. And it may make you understand that ranching can be a one-time-a-year payday. And sometimes that payday is really great, but you have to budget and learn and how to make that last a year. Because ranching doesn't pay every year. Andy told me to be real, so I'm going to try to be real. And Andy and me can vouch for some of these things that it doesn't work every year. To unknown factors and factors that come along. So be prepared for those. Another good way to secure your first loan or when you're starting out or for several years is with a guarantee. There are several places to get a guarantee. I mean, you can get a co-signer, family member, friend, neighbor, partner. Always find a partner that's got more money than you. That's key right there. Or a government guarantee. FSA, Small Business Administration, you have, I'm sure as Canadian, have an FSA office here. You know, you talk with those guys, they'll either make you a direct loan or they'll set you up a guarantee where our risk is really limited and we can help you and you borrow the money from us, sign a guarantee with them. Something goes bad, they pay most of it off. Questions? Does anybody have any questions they want to ask at this time? Takes a lot of capital. Okay. We have some programs for young, beginning, small farmers. We call them farmers. They can be ranchers. It's just a government term, farmers. That as we analyze your portfolio and your needs and your request, if there's one or two things that maybe aren't to the standard that we expect, we might stretch that just a little bit. But truly the best thing if you're starting out and you really don't have much and you can't find that co-signer and you can't scrounge up a down payment, is the FSA direct loan or FSA guarantee. They'll have 40-year terms. They have a low rate, but you pay a pretty hefty fee. But that's how a lot of people get started. And if you're to the point where you can just get that guarantee from them, I think it costs 1% or something of the loan and guarantees 95% of the loan, then we're at a 5% risk in the deal, and we'll like that. So if you can't get there with us, get there with them and us together. Matt Chisholm had a question. Well, okay. Okay. Who among the top 4 are you legitimately going to find to sign the note? Is that correct, Matt? Probably the 5th one's the best one. Is most accurate. But there are people that believe in this young kid. They know he's lucky. He got to get out of school on his birthday. He won a big prize. He won $100 million from Amarillo National Bank on a gift card. Family members. I mean, sometimes there's an uncle that doesn't have an heir, an aunt, grandfather believes they're going to help their legacy. Sometimes a neighbor that kids worked for all through the time, yeah, I'll help you get started, but they're not going to assume all the risk. But they also have to believe in you. But that makes it where you get that mentor-mentee relationship where they understand that, hey, I've watched this kid work all these years. He's helped me. Now I'll help him to some extent. Does that answer your question? Agreed. So are 3-inch rains around here. But they do happen, and you can be successful without them. Yes, sir. As Chris had made a good point here, if you are a cosigner, but not a guarantor, if you are a cosigner, that does need to go on your balance sheet as a liability for that full amount. Okay. Thanks, Chris. Anybody else have anything? Well,
our Extension Hemphill Agrilife Ag Committee, that's the steering committee that I work with to put on this conference each year, requested this kind of information be presented at our beef conference today. So have you enjoyed this? Has it been useful to you?
well, thanks for the applause. I know that this is one of the topics that's really kind of not the most exciting, but now that you've known this, you know your loan will be closed, you'll get your funds secured, and good luck. If you have any questions, we'll be back there in the back. Thank you.